The Trade is brought to you by Vantage Markets, delivering one of Australia's most trusted and award-winning trading experiences. Explore smart trading at vantagemarkets.com.au.
Hello and welcome to The Trade. Before we get into the technicals, a quick look at what traders are watching. And China says it will impose anti-dumping levies of more than 78% on some types of US single-mode optical fibres from today. President Trump, meanwhile, saying the US might have to unwind trade deals that it reached with the EU, Japan and South Korea if it loses the Supreme Court tariffs case, warning a loss would cause the US to, quote, suffer so greatly. Several Fed officials have said labour market worries continue to animate their belief that rate cuts still lie ahead for the central bank. Meanwhile, the RBA Governor Michelle Bullock has welcomed the rise in consumer spending as revealed in yesterday's stronger than expected GDP figures. Let's get across the currency technicals, and Nick Twaddle from ATFX joins me. What was interesting though when we look at the Aussie with what Michelle Bullock said was that there might be fewer rate cuts if we keep spending. So what does that mean for the Aussie?
Well, I think it gives us a bit of an underlying bid tone for the Aussie. It's one of those things. We know this RBA board's been very keen. They've been hawkish, really skewed for most of their tenure. And Aussie's rallied nice. Now, Aussie's rallied overnight nicely on the back of a weaker dollar as well. But I think it does add a little bit of support. So we've got that CPI number and which we had the week before, and GDP numbers both coming in stronger than expected. So it's going to give the Aussie that underlying big tone and maybe disappoint households moving forward that we might not get as many rate cuts as we were hoping for.
Yeah, absolutely. Now, when we look at what we're seeing in the greenback, I mean, I saw one of the Treasury officials saying that China is using a yuan potentially as an olive branch in the US trade talks. But what are we seeing in some of the majors, and particularly, I guess, when you look at the yen and US dollar?
We're still in ranges, but we're seeing some quite violent volatility within those ranges. So we saw a massive appreciation in the dollar on Tuesday, and then a drop back yesterday. So it's kind of it's going to be very interesting, and unfortunately, I'm going to say the words non-farms a few times tonight. It's going to come down to that number. Well, I think we've got that September rate cut locked in. I don't think there's any way they can't go with that, but it's that expectation moving forward. And now uncertainty has suddenly jumped back into the market with us not really knowing what's going to happen with tariffs, and we've got President Trump kind of confirming it overnight. And a lot more volatility. So this is the dollar yen chart that we've got up at the moment, and we're slap bang in the middle of the range. But we've seen some big moves already this week and we've got other jurisdictions pumping into it as well. With the UK, their 30-year yield went to its highest since I think I entered the markets. That's how long ago we've hit those levels. That saw a big appreciation in the dollar as sterling slumps, and a similar situation with uncertainty in Japan as well, that yen's flying all over the place. And it's going to be an interesting quarter ahead, I think, for FX markets. A lot will depend on what we get from non-farms on Friday for the immediate short-term moves. But I think, you know, the dollar's going to fly around a bit, and it's going to be interesting to see where we sit in 3-6 months' time as to whether it's the world's reserve currency anymore. Really.
Yeah, that makes, you make a very good point there, and what could replace it. And I guess we look a lot at the yen, but what about what we're seeing with the euro?
Well, I think euro would be number one contender if we did see a movement out. And as you can see, there's a few currencies sitting really nicely on technical levels ahead of this non-farm payroll. It's appreciated really nicely. It bounced well off that. This is the daily chart, so it was a good bounce off that trend line support the other day. We're back up around 116.50, and it could move either way on tomorrow's data, and even data coming out tonight. We've got some more big job numbers coming. We've got the ADP tonight. We've got the weekly unemployment claims coming off the back of those JOLTS numbers as well. Good trading opportunity for the euro, but I think it's still probably going to be bid on dips in the current environment.
Yeah, absolutely. Okay, let's look too in terms of what we've been seeing with cable. What's happening there?
Well, sterling took a massive hit, like I was hinting at earlier, on Tuesday, and it was a fast move down, which you can see on that chart there. It's recovered somewhat, and it's trading technically very nicely as well on that daily support trend line. Sitting around that 134.35 level at the moment. stronger numbers would be a big surprise. I think that's the risk from the non-farms. That could see cable go, and I think that would be the direction that would really see cable move, is if we did get a surprise stronger number in the US, and this sort of negative connotations that we're getting from the UK at the moment, especially from the Treasury markets. If it breaks down through those lows and through that trend line support, it will hurry down, I think, to the 130 level fairly quickly.
And are we looking at the Swissy or the yuan?
Well, I had a little look at the Swiss because we've got CPI data out, and Swiss National Bank's the interesting one because it's at zero rates already. CPI is expected to come out around at zero again, which will put further pressure on the Swiss National Bank to maybe go to negative rates. So that's another, I brought this out because the trading opportunity here is that, once again, I think the risk really is with that interest rate differential expectation coming in, which is easy for some to say. We get a stronger non-farms, which pulls back not the September rate in the US, but probably looking forward. And then we get a weaker number or a zero print for the Swiss. I think dollar Swiss could be an interesting opportunity for the top side. If it breaks those levels, it could extend nicely up to sort of 83 and then 85 cents.
Yeah, all right, we'll continue to watch. Nick, thank you as always.
Thank
Nick
you.
Twaddle from ATFX. That does it for this edition of The Trade. Be sure to join us next time.
The Trade was brought to you by Vantage Markets, delivering one of Australia's most trusted and award-winning trading experiences. Explore smart trading at vantagemarkets.com.au.